What's going on, everyone? Happy Friday. It is your friend Ryan here with our producer Peanut in the house. He's never too far, but anyway, you guys know what that means on with Peanut. So I don't make the rules, guys, but we do have to abide by them. Happy Friday, guys. I hope you all had a great week. Welcome back to the Dividend Happy Hour. I am so stoked to be here with you guys for another video. I was really looking forward to the stream. Like Salvatore here said, best part of the week. It sure as heck is. I look forward to doing this every single week. So I'm excited to get into it with you guys. And you know, what a weird week, right? Like let's just jump over to the portfolio real quick. I'll show you guys what's kind of going on. So right now I'm sitting at $69.6 thousand or so in the account. And I think this week, just this week alone, I think I'm maybe down about 1.5%. So kind of interesting, guys. I did see like a new all-time high in the portfolio earlier this week. I did see things get up to maybe like 71.2, 71.3. But yeah, now we're back down under $70,000, which is okay. That's just how it goes. It was cool to see that new high for a moment. But yeah, overall, really interesting week. But anyway, guys, before we go any further, why don't we kick this off the best way we know how? Let's do a quick cheer. So grab whatever it is you're sipping on tonight, guys, and here's to you. Thank you for tuning in and hanging out with me tonight for the Dividend Happy Hour, episode 101, which is very cool. So yeah, here's to you guys. Thank you again. And also here is to the pursuit of that sweet cash flow. Here's to the dividends, which is what's really bringing us together tonight. But all across the board, cheers. Let me know a few things here in the live chat. Number one, I want to know what you added to your portfolio this week. I want to know which stocks you picked up. Number two, I want to know what you're sipping on tonight. I'll tell you guys what I'm rocking with here in just a moment. But also number three, I want to know, did anything cool happen in your guys' portfolio this week? Did you hit any new milestones? Did you finally get that 100th share of realty income? Did you finally hit, $1,200 of annual dividend income? What happened? Anything cool that happened to you guys? I want to put it up on the screen and give you guys some shout outs there. But real quick, what I'm sipping on here, I just have like a decaf iced latte. My wife made it for me right before the stream. So very delicious. It's been really nice having decaf around the house because sometimes just the coffee tastes is good, but you don't always want to have caffeine super late in the evening. So it's perfect. But anyway, I'll be looking forward to seeing what you guys say in the chat. In the meantime, I'm going to scroll up here and see who we got in the building. I see X Dividend Dad. I see Shamizzle, Great God, Adon, Pat, Charles, Waco, Wacho, Tony's here. Good to see you. S. First time catching an episode live. That's awesome. And actually, on that note, let me know another thing in the chat. If any of you guys, if this is your first time tuning into the live stream, let me know in the chat. I always like seeing who's new here and who are some of the usual suspects. So let me know if this is your first time tuning into the Dividend Happy Hour. And just in case it is, we do this live stream every single week. So you can catch me live here on YouTube every Friday night, starting at 5 p.m. Pacific time, 8 p.m. Eastern time. So, but yeah, hey, if this is your first time, thanks for tuning in. I hope you enjoy it. And we usually run this for about an hour. So yeah, we'll go for an hour tonight. Last week we went, for episode 100, we went a full 2 hours, which was crazy. Definitely not going to be doing that tonight, guys. Okay. Who else? We got CAs is in the building. We got the legendary Dividendology in the building, my friends. We are in the presence of greatness. Good to see you, man. Thanks for tuning in. We got the Lean Mean Dean Machine. What's up, Dean? There we go. We got TJ in San Diego in the house. Love it. Striper Kid. Let's see. Salvatore is asking me about Nike. We'll circle back to that in just a moment. Brian's here. Sir Dude Bro Man is here. DGI Crab. That's a cool name. Good to see you, my friend. Travis is here. We've got King Art. What's up, big dog? What's going on? Mountain High's here. Mike's here. C3 is in the building. Janice is here. Phil's here. Zimpow. I like that. That's a cool name. Jorge's in the building. We got Gilly. Nice. Good to see you, Gilly. We've got Charash. Hopefully I pronounced that correctly. Arjuni's here. Anthony's here. Vernon. Ted, good to see you, Ted. Andrew's here. Wes, Bob, Ravi, man, everyone's here. Mark's here too. Can't forget about Mark. Honeybee. Let's see. Henry, Julio. I'll scroll back up and put some of your guys' purchases and stuff on the screen in just a moment. I do want to, while I'm here, I did see Margarita just jumped out to me as I was scrolling. My eyes immediately went to Margarita. Tony sipping on a Reposado Margarita. Oh, that sounds so delicious right now. Good stuff. We got to have another one for me tonight, Tony. I'm trying to be good for another few weeks. We're going to Mexico. My wife and I are going to Mexico for our honeymoon on the 21st. So trying to be good until then. Lucas is here. Good to see you, man. Speaking of man, we got Yeah Man here as well. Shannon, Giorgio, Reese, cool. Lolly, Gaming Incident, Braming, Wallet Invest, Bay, Isaac, yeah, Jeremy. Man, everyone's here. Alexander's here. Caleb, Fast Eddie. I'll scroll back up in the chat real quick. Chuck's here. Cool. And then we're all caught up. Gave shout outs to literally everyone in the live chat. So guys, thank you once again for tuning in. Let's see what you guys are picking up. Let's see what you guys bought this weekend. Just getting it out there. I ended up buying some, in addition to my usual SCHD and Johnson & Johnson, I picked up some Johnson & Johnson. Yeah, no, I screwed that up. In addition to my usual SCHD and VU, I added Johnson & Johnson this week. So, okay. Janice picked up some Visa at $269.50. Very nice. Phil also bought some Visa. Nice. Yeah, good week to buy Visa. Salvatore, yeah, Realty Income at Nike, Dow, and then Devon Energy. Is that what that is? DVN? So, and we'll go back to Nike in just a moment. I have a feeling that's going to be a pretty popular one in the chat tonight. Nike's definitely I think it's sub $80 per share right now. So we'll take a look at that in a moment. Let's see. This is really cool. Zimpow, cool little accomplishment. Received my first $100 from a single dividend from NIE. That's awesome. NIE is, let me see. Let me just jump over here. NIE. I do not know what this is, but looks like it's some high yielding, maybe not a closed end fund, but maybe it's it's some sort of ETF here. I'll show you guys real quick. Let me do that. You guys can see the screen. So we're looking at Seeking Alpha right now. So NIE is the Virtus Equity and Convertible Income Fund. First thing right off the bat, we're going to see a pretty high expense ratio, 1.12%. Dividend stats, 8.6% yield. So, that's high. Net of fees, you're looking at a basically 7.5% yield. Okay, it's a closed-end fund, closed-end mutual fund. You invest in stocks of companies across different sectors. Cool. Growth stocks of companies. What are some of the holdings here? Interesting. So I'm guessing I didn't get this far in the description, but I'm guessing it's some sort of options income. Where's it going to say it? Current income and gains, equity income producing convertible securities. Okay, there it is. The fund also employs a strategy of writing call options on the stocks. Okay. So there you go. There you go. Interesting one. But anyway, let's go back over to the chats. And I'm sorry about this right here, guys. I'll try and stay out of the light so it's not wonky. Let's see. Gilly with some nice pickups here. ADP, Vici Properties, Starbucks, and Visa. I like all of those. Chirash here with some nice SCHD. Good stuff. And also, guys, I'm sure you guys know by now, but SCHD is going to be coming out with a pretty nice dividend payment on July 1st. So maybe we can take a look at that as well, see if there's anything on Seeking Alpha. I haven't seen anything on Seeking Alpha talking about it, but yeah, otherwise I've seen some really good news about SCHD. Let's see. Mike here picked up some Coca-Cola, Kroger, and Altria Group. Okay, all good week for some consumer staples, I suppose. CA's bought Ford. Okay, NSC, McDonald's, Nike, Hershey, J&J, and drinking some coffee. Nice. I'd say for the most part, those are all really solid buys. I have a hard time getting behind Ford. Obviously a pretty legendary company, but yeah, just not one that I personally feel the need to invest in. But yeah, with I mean, with all of those, even including Ford, you some pretty decent buys there. So okay, Shamir sipping on Coke Zero, his usual. Didn't buy anything apart from reinvesting dividends in VU. Looking forward to SCHD and yeah, SCHD and VU dividends for sure. So SCHD is paying on the 1st. VU, I believe, is paying on the 2nd. So the first week of July is going to be pretty nice for dividends. Yeah, and Coca-Cola as well. They're also paying on the 1st. So DGI Crab. So another Nike buy here. Nike, the Hershey Company, Hormel, and Johnson & Johnson. Yeah, all very discounted. Hormel's really come down. The Hershey Company's really come down. In case you guys missed the video I put out on Wednesday, we talked a bit about the Hershey Company. Yeah, that one's really all 4 of these have come down in price quite a bit. So, oh, there we go. Cool little milestone for Anthony, guys. My best month of dividends after 1 year of investing, $29.86 in the month of June. Anthony, good job, my friend. That's awesome. $30 without having to lift a finger. That's fantastic. Good for you. Let's see. Mountain High with some nice buys here. So Blue Owl, Capital Corporation, UGI, Starbucks, and more DNA. What is DNA? DNA is Ginkgo Bioworks. Not a dividend payer, down 81.6% in the last year. Interesting. I'm curious to know, Mountain High, what's the draw to DNA? I mean, it's 33 cents per share. What's the draw to this company here? I'm curious. Uh-oh, Adon's not feeling too well, guys. Get well soon, Adon. Sipping some tea and grabbed, holy cow, Adon's 670th share of SCHD. That is crazy. Wow. Unreal. Vernon with a couple nice pickups, SCHD and Starbucks. That's great. Sir Dudebro Man bought some Main Street today and will be buying around 4 companies tomorrow via dividends. On Monday, you'll be buying those. Yeah, Salvatore says Hershey looks very interesting for sure. For sure. Ted says I added Vici and MSM. What is MSM? MSC Industrial. Huh. Nice 4.25% yield. Cool. Let's see what else we got going on here. Striper Kid picked up some Starbucks, SOUN, which I'm not familiar with that one either. And some JEPQ. Soundhound. Interesting. Not a dividend payer. Soundhound AI. I'll just put this up on the screen. Develops independent voice artificial intelligence solutions. Okay. Huh. Okay. Houndify. Huh. I mean, revenue growth is pretty nice. I'm guessing where was that? Santa Clara. I'm guessing it's going to be negative net income. Yeah. Okay. So they're still like a early stages growth company. So hoping good things for you with that one, Striper. Let's see. This is cool. Jorge says watching every week, but this is his first time making it to the live. Well, Jorge, thanks for tuning in, my friend. I hope it's fun for you live. I always wonder if, I'm sure it is. I always wonder if it's like a different viewing experience live. I don't wonder. I know it is. There's a handful of, this is so silly, guys. There's a handful of Las Vegas content creators that I like to follow and watch. And they'll do things like hotel room reviews, restaurant reviews, buffet reviews. They'll even just do live streams walking up and down the strip. But there's one channel that I watch, this guy named Matthew. His channel is called Say Hi to Matthew. I highly recommend it if you guys are looking for some good Vegas content. He seems like a really cool guy, but it's always fun. He'll do these live streams usually once a week or once every couple of weeks, just kind of like this, just like talking head, just answering questions, talking about Vegas stuff. And it's always fun to pop in there and just join into the chat. So anyway, yeah, live streams are fun. It's fun. Obviously it's fun, like doing this and interacting with you guys this way, but it's also fun, like being in the live chat and someone else's stream too. I did not mean to go off on a tangent with that, but anyway. Honeybee started a new Nike position. Nice. Okay. And this is a good question. Salvatore says, do you think adding $100 a month to SCHD and VU is a good idea? Yeah, I think it's a pretty good idea. I personally do something similar. I invest $130 every single week, divvied up across both of those ETFs in my Roth IRA. So yeah, I'm a proponent for just regular contributions to both of those funds. I think that's a pretty solid approach. But once again, I'm biased because like that's what I do as well. So, but yeah, others might not share that same sentiment, but it's working out for me. I enjoy it. So, let's see. Bob here picked up some Aries Capital, Realty Income, and FEPI. Is that just like another covered call ETF? I feel like I've seen this ticker numerous times. So the RexFang and Innovation Equity Premium Income ETF. Okay, so it's just another covered call fund. Seems like they're a dime a dozen these days. I'll tell you guys what. And I'm curious to know too, with that said, what do you guys like? How do you choose if you're looking for a covered call ETF to put your money into? What, like, when you're comparing different ones, whether it's FEPI or JEPI or JEPQ, or what was that other one that closed-end fund we saw a moment ago? DNA was it? And there's obviously others, QYLD, XYLD, the other YLDs. There's a handful of other ones even in addition to those. What are you looking for? Like, what makes you want to go into something like FEPI instead of JEPI? You know what I mean? I'm curious to know here in the chat. Let's see. Henry's first time catching it live. Love it. Julio as well. First time. Awesome. Let's see. Sarav, this is okay. So first time here. Welcome aboard. Can someone explain to me what the stream is about? It's just hanging out, basically. We're just hanging out, talking stocks, catching up. And, there's really no rhyme or reason to these live streams. There's really no set plan. We just kind of hop on here, hang out for an hour and see where the conversation goes, which I think is kind of the fun of it. So that's what this stream is about. It's the stream about nothing and everything. Okay. Let's see. Wow. Kama here had a really nice shopping spree. Bought $1,000 of Visa. So that's about, just under 4 shares, 15 shares of Bank of America and 10 shares of the Hershey Company. Wow. Good job. Really nice buy. So is that like Kama, did you sell some stocks to make that large of purchases, or is this like a weekly norm for you contributing this much, or did you just invest more than you usually do? What's the story with all of these buys? Because that's some damage right there. That's good stuff. But yeah, I'm curious to know. Let's see. Yeah, man picked up 20 shares each. Oh, interesting. Of Walgreens Boots Alliance and Leggett & Platt. I'm curious to know the thought process behind that. If you feel so inclined to share in the chat, I'm curious to know, because I don't know. Anyway, I'm just curious to know what your thought process is with those. And also 2 shares of Starbucks. Yeah, let me know. I'm curious. Let's see. Shannon with some nice buys here. Realty Income, Vici Properties, Visa, and NVIDIA. Nice. Nice. Okay. Let's see. Charles says my weekly buys: SCHD, SCHG, SPLG, and FTEC. Nice. And guys, once again, I'm sorry about this this light that keeps popping up on the face. I'm sitting by my blinds, and just the time of day and the time of year, the light still gets in. It is what it is. So let's see. Let's keep going. Lolly says, not first time in the stream, but first time commenting. You should start a podcast. Oh, thank you. It's something I've thought about before, but I just don't know that I want to commit the time to a podcast right now. I think there's other things I'd rather do, but maybe at some point. And I think it'd be fun if I were to do a podcast. I don't know that I'd want to do it by myself. I'd want to do it with like someone else. I'd want to do it with one of my other friends here in this investing space. I think that would make it more fun for everyone involved. So, but yeah, maybe at some point. King Art, did you buy more Visa today? No, not today. I didn't. Just Johnson and Johnson earlier this week. So, all right, let's keep going here. It looks like I'm about 15 minutes behind in the chat. I'm going to scroll down a little bit. Giorgio with a cool little milestone, though, guys. I got to $200 average per month in dividends. That's crazy. $2,400 per year, $200 a month is no joke. I think that's a pretty serious chunk of change, Giorgio. So, congratulations on the milestone and keep up the great work. That's huge. Let's see. Excuse me, guys. Let's see. This is a good question, guys. And I'd be curious to get your thoughts on this in the chat as well. Reese wants to know, would you suggest to invest in VIG or VYM? I'm planning on long-term dividend stocks. Let's just take a little bit of a look at both of them because I think they're both really solid options. We're going to start with VIG. We'll take a look at the top 10 holdings and the dividend stats. So VIG, dividend appreciation ETF. So this is certainly a dividend growth fund. And we can tell from these top 10 holdings here. We got Apple, Microsoft, JP Morgan, Broadcom, Exxon, UNH. So basically a lot of just dividend growth behemoths right here. You know what I mean? And in total, 342 different stocks. And now looking at the dividend stats, this is pretty solid. You got that low starting yield, 1.76%, but nice double-digit 5-year growth rate, and then 10 years of dividend growth. So would you, and keep in mind with this, Reese has a long-term time horizon. So I don't know exactly what that means, but let's assume it's at least 15 to 20 years. And Reese, correct me if that assumption is as incorrect, but let's just say 15 to 20 years. If that's your timeline, you'll do pretty well with this. And we can look at a little example here in just a moment. Actually, we'll do that. So dividend, we're going to go to the dividend reinvestment calculator at dividendreinvestmentcalculator.com. This has become, I usually use like the market beat one, but this is becoming my favorite dividend calculator. So, and once again, you guys, you see the URL though, you see the URL there. You can find it at dividendreinvestmentcalculator.com. So let's just plug in some stats here for VIG and we'll take a look and see. I'll do this quickly so we can get to the other comments, but let's just start with an initial lump sum investment of, let's just start with like $100. Okay. We're going to start from ground zero. And let's say that every single week, we're going to invest $100 into this portfolio. We're going to do this for, let's just say 20 years. Okay. And then as far as the dividend stats going back over here, 1.76%, 10.26%. Just for the sake of simplicity, we're going to use those numbers. Obviously, it may not play out that way in reality, but that's just what we're going with. Okay, so 10.26. And let's just leave the share price appreciation. Let's just say 9%, okay? Oh, I did this backwards. Okay, 10.26%, 1.76%, okay. Okay, and then we're going to do this for 20 years as well, okay? So, and let's change that. So based on these inputs, guys, starting with $100, investing $100 every single week into VIG, by the end of those 20 years, you'll have, looks like about $340,000 in this portfolio. Not too shabby. And then as far as the dividend income goes, you should be bringing in about, just in that 20th year, about $6,450 almost. Okay. So not too bad. After 20 years, you might be looking at that thinking I estimated it would be more. But remember, we're only investing about $100 per week, which is still a decent amount. But if you obviously bump that up to $200 per week, it starts to look a bit better. So here at this point, after 20 years, you're averaging over $1,000 per month. But with that too, if you gave yourself a little bit of a longer time horizon, like let's say we're going to go 30 years now instead of 20. So instead of bringing in, what was it, 6,400, let's call it, in that 20th year, just after 10 more years of compounding, you'll be bringing in 23,000. So almost $2,000 per month. This is with VIG. And also in this portfolio, you'd have just almost $1.1 million. So that's with VIG. With VIM, let's see what we're rocking with here. So this is the high dividend yield index fund ETF. So the dividend stats with this are a bit different. We've got a higher starting yield, 3%, and about half of the dividend growth rate at 5.8%. And so let's go and plug some of these numbers in here. Let me go back here. So 3.01% yield, Okay. 5.81% dividend growth rate. 81% dividend growth rate. And then let's say the share price appreciation is going to be a bit lower. Like, let's say it's maybe 7%. And we're just like eyeballing here, guys. Just eyeballing. So, and otherwise, same inputs, starting with $100 a week, or starting with $100, investing $100 per week. So, after 20 years, it looks like we'll have $293,000 in here, so less than what we'd have with VIG. And the same is true after 30 years. We'd only have about $800,000 compared to like 1.1 million with VIG. But with that, well, and with that, I should say, the actually with this, you're after 30 years, you're bringing in more dividends. So with VIG, it was like $12,800 or so. With this, it's almost $15,000. So it's a bit higher. Oh no, excuse me. I'm totally wrong. After 30 years with VIG, it was almost $2,000 per month, right? I think it was like 23,000. So with this, it's only 15. Let me just confirm that. It was 1.76, and then it was 10.26 or something like that. So yeah, you'd be better off just based on this. It looks like with it looks to me like VIG would result in more money just based on these inputs, but this is just a very rough like simulation, and it could play out totally different in real life. But anyway, hopefully that was helpful. Yeah, definitely check out that dividend reinvestment calculator, guys. It's a really handy tool. So, okay. We got Tomas from Portugal. How was your week? I had a really good week, really busy week. Really busy week. Today, actually, and I think I told you guys this last week or maybe 2 weeks ago, but I've had another investment property under contract, and we just closed on that today officially. So that's very exciting. And yeah, it's been a very busy week, and I've got some other really cool stuff just regarding YouTube and dividend investing and stuff like that. I got some really cool stuff in the works. Something really cool that I'm working on that I'm not quite ready to share details on yet, but working on a little project. At some point soon, I'll talk about it a bit more. But it's I started working a bit more on that today or this week, and that's been cool too. But anyway, it's definitely kept me busy. So let's see. We got the dividend dog in the building, my man Ted. Good to see you, dude. Thanks for tuning in. I know Lucas says Ryan with the light on his nose. I know. Real quick, guys, it's getting a little bit toasty in my office here. I need to turn the AC up a little bit more. So bear with me. This is cool. Travis says, I work at Specs in Texas. So it's awesome to see everyone's different alcohol drinks and how happy everyone is. Nice. Let's see. Let's keep going here. I know we need to go check out Nike. So maybe we'll hop over and do that in just a moment. So yeah, I see some more in the chat about Nike. So let's keep going. Let's go SCHD. Yep, 100%. Let's see. Okay. Okay, let's jump over, guys, and just see what's going on with Nike. So I think they reported earnings, didn't they? I think that's kind of what. Well, first oh my gosh, actually, I did not know that the drop was this substantial today. Okay, so they must have reported earnings. So Nike's down 20% today, guys. That's insane. So down 20% today, which is going to leave them with a 30.6% year-to-date decline and a little bit more in the last 365 days. So I want to go check out this article in just a moment, see what Amrita has to say. But let's take a look at these earnings real quick. So they came out with earnings yesterday. Looks like miss on top line. Okay, we'll look at a few different articles. So here's the high level stuff. So earnings beat by 17 cents. Okay. Revenue was down 1.7% year over year, and there was a slight miss. Nike Direct revenues were down 5.1. Nike Direct revenues for fourth quarter were 5.1 billion, down 8%. Okay. And I'm guessing Nike Direct is like direct to consumer. Wholesale revenues were up 5%. Okay. So margins increased for the quarter. That's great. By looks like 1.1%. Inventories were down 11%, reflecting a decrease in units. Okay, they have more cash compared to this time last year. So this doesn't just these high level numbers don't seem too terrible to me. Very slight miss, beat on earnings. Some good profitability news. 2-for-1 split. Interesting. Let's go through some of these comments real quick. Balance sheet remains strong. Okay. How do you grow earnings on declining sales? Should be, I mean, it's totally possible to grow earnings on declining sales. Something that Altria Group's been pretty decent at. Or at least stagnant sales, I should say. Okay. Okay, this is kind of an interesting comment. It looks like, considering the current backdrop, I'm pleased with the earnings. Nobody likes to see top line misses. However, in the grand scheme of things, a 2% miss is simply noise. Yeah, I don't think that's anything that crazy. China growth engine no longer exists. Take a look at Greater China revenues. Footwear up 2%, apparel up 5%, equipment up 28%. That's huge. Okay. Yeah, Paris Olympics coming up. So this says, this makes too much sense for this site. I want to read more Nike's dead, entire brand. Yeah. There you go. So I don't think just at a glance, I don't think that's too terrible. Share slump is maybe this is why the shares drop so much. This right here. So CFO hints to guidance cut, revenue misses expectations. Okay, the revenue miss, I just really don't think that's that big of a deal. If that happens consistently and revenue declines consistently, then yeah, but a one-off type of thing. And it might happen a couple or a few quarters in a row. So, but still nothing crazy. Okay. Hinted to a guidance cut, and Q4 revenue was worse. Okay. Encouraged by our progress, our fourth quarter results highlighted challenges that have led us to update our fiscal 25. Yeah, so this is not, I'd say this is pretty akin to what we're seeing, like what we saw with companies like McDonald's and Starbucks. It's a very similar type of sentiment, it seems like. So a more difficult consumer environment, essentially, which happens, that's just kind of the ebbs and flows of the market and the economy. And so things like this are bound to happen from time to time. Let's take a little bit of as macro headwinds have pronounced impact. Okay. Let's take a little bit of a look at their financials though. I mean, for the most part, Nike's been a pretty consistent grower. I mean, in the last 10 years, their revenue's gone from 30.6 billion to over 50 billion. Excuse me, guys. Gross profits grown as well. And let's see what their margins have done. Their margins have pretty much stayed consistent. I mean, mid 40s across the last decade. Looks like the operating margin, very similar story. Net income margin, very similar story as well. So these margins have been very consistent. I mean, if we look at the trend line for the earnings per share, that's definitely trending up over the last decade. They've been buying back shares. And by the way, like this is pretty much how the earnings per share can go up if revenue goes down. I mean, there's two different levers there. If revenue goes down, you can still grow the earnings per share by reducing the outstanding shares or by just becoming more efficient, increasing your profitability. And a combination of those things could potentially result in higher earnings per share, even if revenue has declined. So it's possible. Let's see what else we got here. They keep mentioning the balance sheet in the comments, saying it was good. So let's take a look at this. I mean, yeah, pretty decent cash. I mean, they've definitely grown their cash position in short-term investments over the last decade, almost doubled it actually. And what else we got? What's the net debt looking like? So honestly, guys, like very minimal net debt. They only have $370 million of net debt, which I guarantee you is easily covered by the free cash flow. So it doesn't show it for May 2024, but prior to that, we're looking at billions of dollars in free cash flow. So yeah, Nike's looking like it's in a pretty good position. Let's take a look at some of the growth stats over the years, though, because we mentioned it's a pretty consistent grower. Okay, across the last decade, we're looking at a mid 6% compound annual growth rate for the revenue. Not too much lower in the 5-year period. Really jumped up in the last 3 years. So the free cash flow growth over each time period is looking really good. For the most part, I'd say the net income growth is looking really good as well, at least in the 3-year period. And in the 10-year period, the net income, the bottom line is growing at a faster rate than the top line, than the revenue, which ultimately will result in higher margins. So that's a good thing to see. So I think there's a lot to like about Nike. When I think about this company, I have I'm kind of somewhere in the middle of two different things. I think on one end, you've got like probably one of the most recognizable brands in the world. Like who doesn't recognize the swoosh, you know what I mean? Or just do it. Like there's just so much, it's so easy to recognize Nike. They have such a strong brand. And they're a very obviously dominant player in this space. But then on the other end of that, retail is very, very fragmented. There are just countless clothing brands. And as time goes on, it's easier and easier to create your own brand. And especially in this type of space, if you're talking about like athletic wear, I feel like I keep my ear pretty close to the ground on health and fitness and stuff, because that's just one thing that I'm really interested in outside of investing. And I feel like, fitness apparel brands are just popping up left and right. I feel like they're a dime a dozen. Like every day I hear about 2 or 3 new fitness apparel brands. So there is that. The consumer has more and more options outside of Nike. And one thing that I did read about Nike, actually, I read a Wall Street Journal article on it a couple days ago. They've not done a good job of capitalizing on the boom in running compared to other brands like Hoka. In the comments of one of these articles, someone mentioned On, I think is the brand name. So, and even New Balance and whatnot. Not to say that Nike's like a small player in running, but some of these other brands have crept up and taken some of their consumers. Really interesting article. If you guys have a subscription to the Wall Street Journal, I highly recommend you check it out. But real quick, and I'm sorry it's taken me a few minutes to get to this. Shoddy here says, do you recommend me to sell covered calls on my dividend portfolio? Truth be told, and we'll go back to Nike in just a second, but I did see this just now, so I wanted to jump in. First and foremost, thank you so much for the $5 super chat. That's really nice of you. I don't really have a recommendation either way. Speaking personally, options is not something that I've ever done. So I'm probably not the best person to ask about it. It's not something I'm very well versed in myself. It's not something I personally have much of an interest in doing at this time. But then again, on the other hand, I know a handful of investors, probably a good amount of them in this live stream right now, who do sell covered calls and who do sell cash secured puts and regularly trade options and do pretty well with it. One of my friends, Wayne Nichols, check out his channel if you guys have not done so already. Over on YouTube, Wayne Nichols, he crushes it with options. If you want to learn more about options and get some really good insights on that sort of stuff, definitely check out his channel. It blows my mind, like how much income he's able to generate doing it. And it makes it tempting for sure. But, like I said, it's just not something that I personally have much of an interest getting involved in at this point. Can't find the straw. Okay. One more. Here, let's do this. Thank you again for the question. But anyway, back to Nike. I guess in closing, I think it still looks like a pretty decent buy. Really, the financials still look really solid. Its brand is still a huge competitive advantage. It's still a huge moat for the company. And it's undeniably a beast. Although the industry is very fragmented, it's a behemoth in the space, and it's one of the world's biggest, best brands. So, and I think that it will take a lot to chop that down completely. So yeah, I think Nike's very interesting right now. There's quite a few interesting, like really interesting dividend stock discounts out there right now. I feel like there's a lot of good options for us dividend investors. Let's see. This is a good question right here from Reese. So when you invest money every week into dividend stocks, do you only buy when it is down, or do you consistently put in money even if it's high and not worry about it? So I actually talked about this in a recent video of mine. The most recent Q&A video. Let me find it for you, Reese. I talked about it for, man, I probably went on like a 3-minute tangent talking about this just the other day in a video. So let me just pop over here. I'll show you over on the channel. It's actually like one of my most recent videos. So this one right here, if you head over to the channel and watch this, I pretty much answered that question, that exact question in the video. But long story short, it just depends. I would say that especially lately, I've been buying stocks that are down in my portfolio just because I have the opportunity to do so, but that's not always the case. And so, but on the other end, there are some stocks that I will buy even if I'm seeing a gain on them. In the video that I have coming out Sunday, I'm talking about Snap-on and considering starting to buy Snap-on again here pretty soon, because that one's seen a pullback. I think that one, even though I'm still up about 30% on it, 30% total return, I still think objectively it looks like a pretty decent price for that one right now. So that's one that I am seeing a gain on that I would consider adding to. And then Visa is another one that I'm down a little bit on Visa right now, but I would still be buying Visa. I'd like to get back to buying Visa soon, but I would buy it even if I was up a little bit on it. So okay, let's keep going. And I'm really behind in the chat, guys. So I'll try and catch up here pretty quickly. So, but Steven here says, or asks if I follow the Dividend Data YouTube channel. I do here and there. I really like Zach's channel. I think that's his name, right? Yeah, I really like his channel. I have a couple of his recent videos in my watch later playlist. I just haven't had the opportunity to check them out. But yeah, he's definitely one of my favorite channels to watch. I would say Dividend Data's up there. PPCE obviously is up there. Dividendology is up there for sure. And when I say up there, I mean I pretty much watch all of these channels videos. So I watch all PPCE. Sometimes it takes me time to get to them, but watch them all. I watch all of the Dividend Diplomats. I watch all of Lanny's individual videos. Dividend Data, PPCE, my man Russ. Got to shout out Russ. Darth Dividend. Who else do I watch? I know I'm missing a handful of them. There's a lot of really good. There's a lot of really good channels in this space that I've been watching lately. Yeah, really good community. Really, really good. Professor G, I got to shout out my man, the professor. So pretty good. Okay. Man, this is actually a really good question. I'm going to screenshot this because this would be good to talk more about in a video. But Gavin, first, thank you for the question. What do you think of a young investor going more risky? I'm looking at dividend stocks like ORC, which is Orchid Island Capital, AGNC, and then PNNT, which I think is like Pennant Park floating rate something or other. I think Pennant Park Investment Corporation. So let's take a look at all of these. I mean, just to answer the question, I don't think that's I'm not particularly partial to that strategy, and I'll try and quickly explain why. I don't know anything about PNNT. This is my first time ever looking at it, so I will say though these dividend stats do look pretty decent at a glance. I don't know anything about the company at all whatsoever, but I think when you're asking, should I, what do I think about going more risky? I think what you're really asking is, what do you think about me taking on more risk with higher yielding investments such as this, such as ORC, which I am not a fan of at all. I don't even care what the dividend yield is. It's irrelevant in my mind, because as soon as I see this, it just becomes an automatic no-go for me. Okay. I just don't see why you would want to invest in something whose dividend history looks like this. Okay. I don't think any yield justifies buying something that looks like this. Over time, on a per share basis, you're going to be losing income. And that just doesn't seem very appealing to me. And I share the same sentiment with AGNC, whose dividend history is pretty dang similar. So although they have been good for the last few years, it's been pretty steady. But otherwise, they have a history of reducing the dividend over time. And I'm sure it's only a matter of time before it happens again. So no, I'm not particularly fond of that strategy. I think that by adopting a strategy like that with those particular type of investments, I think that you would pretty much by definition be yield chasing. And that's just not something you want to do. And I hope all of that makes sense. I think you're better off being more patient, going with lower yielding, higher quality investments that are raising their dividends over time, not reducing them. It's just not a winning strategy. So hopefully that helps, or at least answers your question. So let's see. This is a good question from Lucas. Do you find it difficult, especially in the beginning of your journey, to keep going? And if you say go a while without getting any dividend payouts, your thoughts? Yeah, I think so. I think it can be, but I remember when I first got into this stuff, I remember watching, some of the channels that I mentioned just a few minutes ago. Let's throw Gen X Dividend Investor in there as well. I watch all his videos and I think he's awesome. Mark Rusin, all these other names are coming to me. Brandon Beavis, I watch, love them all. But anyway, a lot of these channels were ones that I was watching right when I was getting into investing. And these are the same channels that inspired me to start my own channel. And I remember, as a brand new investor, I would watch these guys and you'd see, they would show some of their dividend income and they would show just where their portfolios are at. And at least for me, like, that was inspiring. That was something that was really one of the things that kicked me in the pants and made me actually start doing it for myself, because I looked at that and I thought it's a long journey to get there. These guys talk about, having been investors for decades at this point, Gen X and PPCE and whatnot. But, if I start today at 26 years old at the time, there's no reason why I can't someday be in that same situation. But I can't get there if I don't start today. You have to start at ground zero and take it step by step. And so in the beginning, in these beginning stages, I personally didn't ever really feel that discouraged, because I felt like I had some really good, mentors through, and people to look up to, and people to keep me inspired and show me what could be through YouTube. It was such an awesome thing. And that's instead of, finding it difficult, I found it exciting just to know the potential of what can be. So yeah, hopefully that makes sense. But anyway, we've got another really good question here from the DGI Crab, $10 super chat. Thank you so much. I'm new to the YouTube game. Sorry for the shameless plug. I don't mind at all. I actually really don't mind at all. You and the diplomats were my inspiration. Here's a YouTube dividend for you, Ryan. Thanks for your content. Well, thank you. And the GGI Crab, guys, go check out the Crab's channel. I'm going to be doing so. Here, let me head over to. We're going to jump over to the channel right now. Actually, check it out. And so the DGI Crab. Let's go check it out. There we go. And let me see. Stocks on sale. Okay. Let's check it out. I'll save that for later. And yeah, looks like you got a nice library of videos going so far. Looks like you're posting very regularly too. Wow. So anyway, good stuff. I'm excited to check out some of your videos. Thank you for letting me know you have a channel. That's cool. And with that said too, guys, I'm also a huge proponent for anyone starting to do something like this, or like this even. You just never know what these things can grow into. You know, yeah, it's been a cool thing. And really, if yeah, you just got to get started, but it's pretty cool. I'm a huge proponent for anyone having a channel or a podcast or something like this in this space. Once again, you just never know what these things can grow into. This is a good question. Okay. And this is a tough question too. So Andrew says, how do you decide when to bite the bullet and sell a losing stock or a mistake? So Paramount is down 40%. Orchid Island Capital, that's one of them we just looked at a moment ago. A yield trap down 10%. Disney down 30%. Excuse me. And I think that this probably could be a really long and complicated answer, but a couple of things come to mind right off the bat when it comes to deciding when to sell. I think first and foremost, you know, there's a word in your question here that I think can help indicate that it could be time to sell. When you look at something as being a mistake, when you look at something as being the wrong move, at that point, it's probably better to cut your losses and put that into something that you think is going to be a better move or the right move. And so just expanding on that a little bit more, it could make sense to sell if you find a better opportunity for the money that you have invested in these things that you look at as mistakes. And I guess both of the things that came to mind really do go hand in hand they go hand in hand with one another. But the second part of that is, if you're looking at something as a mistake, then, you know, you're probably not too bullish on the company's future. You probably don't look at Paramount or Orchid Island and say, yeah, this is it's down right now, but it's going to be good 5-10 years from now and whatnot. So if you've come to those conclusions in your head about these investments, then it's probably best to just bite the bullet and cut your losses and put that money into something that has what you think to be a better opportunity to grow. You know what I mean? And as my friend Russ says, he says, this is one of my favorite quotes by him. He says, you don't have to make it back the same way you lost it. So just because you're down 30% on Disney doesn't mean you have to wait to get, you know, back to break even with Disney before selling it. You know, you could sell out of Disney, take a 30% loss, put that in something like, you know, put it in Nvidia, and maybe right now you'll make your 30% tomorrow. You just never know. But anyway, the moral of the story is you don't have to make it back the same way you lost it. So that is another important thing to keep in mind. And it's a tough thing to sell some of your losers, because it's, in a sense, it's almost like admitting you were wrong and admitting loss and admitting fault. And that's just not an easy thing for human beings to do. That's just not something that anyone really wants to do. But, you know, at the same time, you've got to give yourself some grace and also reflect on these decisions and analyze and come to understand what about them, what made them a mistake? Where did I go wrong with this? And really sit with those thoughts and think about them. And you can carry that into, you know, carry that along with you in your investing journey. And hopefully that'll prevent you from making those same mistakes in the future. So, and that's really what it's all about too. This is a constant learning experience. And a lot of the stuff you really do have to learn the hard way with experience. So hopefully that helped, Andrew. Yeah, like I said, I could probably ramble on another 20 minutes about that one thing. It's a really good question. Anyway, guys, I'm like 30 minutes behind in the chat right now. You guys have had some really good questions. Really good questions tonight. So yeah, this is another good one. Lolly says, will you be doing another portfolio review video soon? I'll be doing another one in July. So I think that's going to be a monthly recurring video series from now on. I don't know that I see myself doing that more than once a month at this point. Maybe, but for now it's just once a month. So I'll do one like mid-ish July. So Okay, guys, I'm gonna really scroll down here in the chat and try and get caught up. So we're gonna wrap it up here in just a few minutes. So sip a little more coffee. All right. Okay, I see some talk about little Walgreens talk. Yeah, actually, this is another good question. I talked about this a little bit in my Wednesday video because I featured LVMH in that video. Check that out. Check out. It's the 3 deeply discounted stocks to buy in July. But I couldn't find any specific news to indicate why LVMH is down. I couldn't find any company specific news, but there was an election that was announced in France. And around the time that was announced, which was like June 9th, June 10th, that's about when we started to see LVMH see a pullback in share price. From that point on, there was like a steady decline. So I'm thinking that it's possible that that announcement, and LVMH is based in France. So I think that had something to do with it. Just maybe some uncertainty that could come out of whatever this election is. That's the only connection that I can make. That's the only correlation. I don't know if there's any causation there. But once again, I couldn't find any company specific news to indicate why it's down. But yeah, it's seen a nice pullback. So okay. Yeah, this is a good question too, Lucas. Would you ever consider buying Nike yourself? I would consider it. I definitely would consider it, and it is one that I have kind of thought about. But at this point, I do feel that there are other companies that I would rather buy. I would rather put more into Visa than I would buy Nike. I'd rather start a position in Rollins before I bought Nike. I know they're different, but so anyway, I don't dislike Nike, but I do think that there's other companies I would rather own. Like I probably would rather buy more Starbucks than buy Nike as well. So yeah, good question from Kevin Burgess. Kevin, hope you're having a good week. Good to see you, man. What do you think the probability is for a recession in late 25 or 2025? Does that concern you, or does it change your investment strategy? Yeah, I would say that it does concern me a little bit, but I feel that I don't feel that much. I don't feel very afraid for my portfolio. I think I'm pretty well positioned to handle that. I think just in general, like by nature, my portfolio is a bit more defensive. Some of my largest holdings are ones like Johnson & Johnson, Procter & Gamble. I mean, Starbucks is one of my bigger holdings. Visa is becoming another one of my bigger holdings. So I think in general, most of my positions and most of my larger positions either like have a balance sheet to be able to weather out a recession or to weather through a recession, and they've been through them before and have came out the other side okay. And or they're just like defensive by nature. And that's when it goes back to like the Johnson & Johnsons and Procter & Gambles and stuff like that. So I feel okay for my portfolio, but I don't know. It'll be very interesting to see what happens. It will be very interesting to see what happens. I think that's the best way I can put it. But yeah, outside of that, I would say that my investment strategy is still the same though. Like I'm still trying to find like the best long-term investments. And in my mind, what makes for a long-term investment is a company that over the long term, because things have their ebbs and flows, but over the long term, we'll see growth and we'll be able to weather through tumultuous times. And I feel that I do have some good companies for sure that fit that bill already. And there's a couple others I have my eye on. I think Rollins is a really good example of a defensive one that also has a really solid balance sheet and really solid growth. Very pricey right now. And then with that said, though, kind of on that note, I guess there could be, this is maybe not the best way to phrase this, but there could be something exciting about maybe going into a tougher economic period like a recession, because it'd be nice to see a pullback on some of the companies that I've been wanting to buy for a while, like Rollins. If that one really came down in share price, I really wouldn't be too upset. And in the meantime, just outside of the portfolio, I will say I've in anticipation for whatever might happen, which is so up in the air, I'm really trying to position myself on a personal financial level to be able to weather through things. So I feel like I have a lot of cash right now, and it feels good. Like I feel very secure with the cash position I have, and it's part of me is really wants to just put it in the market and buy some more stocks. But at the same time, I think it's important to be able to have that cushion and have that safety net in case we do see things get pretty crazy as far as the economy goes. But I don't know. I guess long story short, I really don't know what's going to happen, Kevin, but really good question. Really good question. I guess I'd be curious to hear your guys' thoughts on that as well. What you guys are doing, what your thoughts are with all of that. So anyway, I'm really gonna scroll down. Really gonna scroll down. That's funny. There you go, Matt. Matt, name your price, man. Name your price. That's funny. Okay. Ooh, Janice, open up a can of worms with this question. What are you reading right now? I'm reading a couple different things. So I'm going through this book right now. I think I've maybe shared it before. This one right here. I haven't made much progress with it this week. I actually haven't read it at all this week. It's just been really busy. And I'm also still going through all of the Berkshire Hathaway annual shareholder letters. So I try and read maybe one or two of those per week. But those are the couple of things that I'm reading right now. I totally forgot to mention Ari earlier. I watch all of his videos as well. Ari's one of my good friends in this space. He's a really nice guy. Honestly, one of the nicest guys that I've talked to, for sure. Really, really good. Really great guy. So anyway, it looks like I'm caught up here. Jeff here says, only reason to hold cash is for a recession to buy assets, way cheaper. Recession make more millionaires than ever. Great God. Yeah, isn't that just be greedy when others are fearful? And I would think a recession would create a lot of fear. SLV coins. I doubt a recession is going to have any major impact on the markets. So I would imagine it would. If anything, it will be a buying opportunity. It will be a buying opportunity, but only because it will have an impact on share prices. Okay, Shoddy with another little super chat here. Thank you again. I was looking at CMTG. I can't really find a lot about it. Can you look it up? Absolutely, I will. Let's check it out real quick. I've never heard of CMTG. So let's go over here. Kevin Burgess too. I watch all of Kevin's videos. Kevin, I'm so sorry. I am never able to join into the live streams. I always catch the replays, but I'm never able to jump into the actual lives, and I'm really sad about that. But I love Kevin's channel. Oh, holy cow, guys. Holy cow. Okay. I've never seen anything like this. 13.8% yield minus 11,000% payout ratio. Okay. Claros Mortgage Trust. I'm just gonna say no right off the bat. Probably not. I don't know. think it's a mortgage REIT. I tend to stay away from mortgage REITs. Yeah, I tend to stay away from mortgage REITs. These really aren't my jam. I don't think this is a great sign. You know, the revenue's been trending down these last few years. It's actually at a pretty significant level. Like the revenue is a quarter of what it was in 2018, and I don't think that's a great sign at all. You know, oh, and even if we go look at the net income, the bottom line, you know, the net income's been going down, and so now it's negative. I just don't think this is probably not something you want to invest in. Probably another yield trap, actually, and I'm going to add that to my list of certified yield traps. The only mortgage REIT that I've seen that I think has any sort of merit is ABR, Arbor Realty Trust. These dividend stats are pretty solid. I mean, this is a triple threat in the dividend department as far as I'm concerned. And from what I remember, the financials look pretty decent as well. Like revenue is the total opposite of what we just saw with this CMTG, right? Operating income's the same, net income's the same. So this company is actually growing, unlike a lot of other mortgage REITs that I have seen. But with that though, the payout ratio has gone up considerably over the years. So 10 years ago, I mean, 35.6%, that seems to be an anomaly. But otherwise, we're looking at about 70 to 80%, mid 60s to mid 70s, let's call that on average. But then 2022 onward, it's up close to 100. And even in the trailing 12 months, it's now over 100%. So that is something to definitely keep an eye on with this company in particular. But yeah, in general, I'm not the biggest fan of mortgage REITs. A lot of them just seem like they turn out to be yield traps. So he said certified yield trap. Yeah, that's funny. It's funny that you thought that was funny. You can steal that, absolutely. So Ree says, so not a dumb question. There's no dumb questions. Don't ever feel like, all of you guys, don't ever feel like you're asking dumb questions. So we're all here to try and help each other learn and get better at this stuff, myself included. But anyway, I was going to make a Getcoin account, but I got sketched out about them having all my portfolio information and such. Is it safe? How much do portfolio trackers help out in organization? I mean, I would say that in general, if you're feeling sketched out, then don't do it. You can always, if you like the platform enough, and just in case you guys want to know what he's referring to here, let me pull it up. So this is Getcoin right here, which is just I think this is probably like the best portfolio tracker I've seen. It's free to use. There's a link to it in the description of the video. But oh, there he is, guys. Got to take a swig now. Peanut just ran past, and I smell dinner, guys. It's almost time to go. But it smells really good. So anyway, this is Getcoin, one of my favorite portfolio trackers, free to use. Really, really like this layout. You asked if it helps with organizing things. I think so. I really like it. I don't know. I just like so much about it. You know, the dividend layout is totally helpful. As you'll see in my Sunday video, I refer to this quite a bit. It's really good for forecasting your dividend income. It's really good for keeping track of all of your holdings. Diversifications are really solid as well. You can do deep dives into different ETFs. So what this will do, it won't work with, looks like SHD or VOO quite yet because it's a relatively new feature, but it will segment the weighting, or it'll weight all of your portfolio holdings, including the individual stocks within each ETF, which can maybe get a little bit messy, but some people do like to see that information. They don't like to see, oh, I have 9% in SHD. They want to see the actual breakdown, like what that entails on an individual stock level. So all the holdings within SCHD. But yeah, I really like using this platform. But like I said, if you feel sketched out about it, don't use it. Don't use it, or just manually track your stuff. So you can sync your portfolio and have everything tracked automatically. But if you feel sketched out about them having access to that, you can always just input things manually. Like you can add a transaction here. You can add a buy, a sell, a dividend, stuff like that. And you can also use it to track other things as well. Like if you have crypto or bonds, cash, real estate, all these different things. If you have art or life insurance, you can actually track it in GetQuinn. You can put your cars in here as well. So it's also kind of like a little net worth tracker, fully encompassing net worth tracker. But anyway, this is GetQuinn. And once again, if you guys want to check it out, there's a link to it in the description. But yeah, no, not a dumb question at all. Okay. Well, guys, I think this is a good place to wrap it up. I see some other questions here, but if I keep answering questions, I'm going to be here all night, and I smell that dinner is pretty much ready. So I should probably just wrap things up here. Hopefully next time I see you guys, this won't be the case. Lucas is totally right. I've been like stuck at under $70,000 for a while now, but it's okay. We're still making progress, and the dividend income continues to grow, which is awesome. At least there's that. But my friends, really fun stream. Thank you guys for hanging out with me this last hour. I really appreciate it, and I appreciate all the super chats. So shout out to Shoddy, shout out to the DGI Crab. Once again, check out his channel. And yeah, thank you guys so much for all the support. Hope you all have a fantastic weekend. Be sure to tune into Sunday's video. I'm going to be going through all of my dividend payments for the month of June. A pretty solid month of income, so I'm excited to show you guys some of those payments. And I'm really excited to show you all of the ones that are going to be coming in July, because that's going to be, I don't know if you saw it on GetQuinn a moment ago, but that's going to be my highest month of dividend income ever. But anyway, guys, thank you once again. I hope you all have a fantastic weekend. Stay out of trouble, and I'll see you in the next one.